Believe it or not, there are people who can do something better than others. Very few people have ideas that can generate money from whatever they do, and Jeff Bezos is one of the few. The richest man in the world has just issued a chilling financial warning that could shake the very foundations of the economy. Yes, Jeff Bezos, you guessed it right. Hold on to your money and prepare for the worst, because what he's about to say may leave you feeling uneasy and uncertain about your financial future. So buckle up and tune in now to discover the shocking truth behind Jeff Bezos' ominous warning. Most businesses die out during recessions. They work their ass off for years, but a recession comes to clear them out. You don't want this happening to you, so make sure to watch till the end for some Jeff Bezos business secrets. Amazon founder and CEO Jeff Bezos is raising the alarm, and he's not the only one. Warren Buffett, Alan Greenspan, Elon Musk, and others, as well as the US government, are issuing a subtle warning to all of its citizens. Welcome! Kindly take some time to like, share, and subscribe to help our YouTube channel grow. Alright, here's a quick question. Is the recession caused by the economy, or has the recession become a solution for the emergence of solid business? You make the call. These times force us to build stronger businesses that can withstand economic downturns. In an interview with CNN, Bezos says that the economy does not look good right now. Things are slowing down. You're seeing layoffs in many sectors of the economy. That means you should consider tightening your belt. According to a recent Insight Global survey, 78% of workers were concerned about losing their jobs if a recession occurred. Hopefully, your fears of losing your job will not come true, but it is still necessary to be prepared. If you've been thinking about changing careers, this could be the push you need to take action. That is not reassuring for investors. However, not all businesses are the same. Some, such as those listed below, may be able to perform well even if the economy enters a slump. The first on the list is fine arts. When asked, he mentioned fine art. Yes, fine art. Everyone was shocked, just as you are now. You probably think of art as just a nice canvas to decorate your living room, but art has quietly outperformed other asset classes for years. Whether you like Mark Rothko's large abstract paintings or not, they are undeniably valuable. A Rothko canvas fetched a record $87 million at auction in 2012. More recently, a collection of other American abstract expressionists, including works by Willem de Kooning and Jackson Pollock, set new records. The collection was sold for $500 million in one of the most expensive private art transactions ever. Such multi-million-dollar prices are likely to attract some opportunistic investors who are entering the art market for the first time. According to Deloitte, art is part of a $1.7 trillion asset class, which is roughly half the size of venture and private equity. According to Citi, contemporary art has outperformed the S&P 500 by 131% over the last 26 years, and it has a near-zero correlation to stocks. Because of its low correlation to stocks, art can be used as a hedge against market volatility. Masterworks allows any savvy investor to gain access to an asset that was previously only available to the ultra-wealthy. Instead of spending millions of dollars on a single painting, you can now invest in shares of individual works. All you have to do with this revolutionary investment platform is choose which shares you want to buy, and Masterworks will handle the rest. Next on our list is real estate. Real estate was his backup plan. You probably heard something about this before, but you haven't heard the whole story. The addition of real estate on this list may seem illogical. Look, one thing about real estate is that you have to be focused and know what you're doing. It is highly suggested that you learn how to take this chance. According to Jeff Bezos, real estate has helped some desperate men stay financially viable. While mortgage rates have been rising, real estate has shown resilience in times of rising interest rates, according to investment management firm Invesco. Between 1978 and 2021, there were 10 distinct years where the federal funds rate increased, Invesco says. Within these 10 identified years, U.S. private real estate outperformed equities and bonds 7 times, and U.S. public real estate outperformed 6 times. Property selection can offer more than just value increase. Investors also benefit from a consistent stream of rental income. However, you do not have to be a landlord to begin investing in real estate. Accredited investors can own a piece of institutional quality properties leased by national brands such as Whole Foods, CVS, Kroger, and Walmart through First National Realty Partners. As always, you'll have consistent, positive cash flow, and the firm will handle the work for you. So you don't have to worry. RP's team of experts bets every deal against a strict set of investment criteria and manages them in-house. No sweat about this one. His third option was completely unexpected for everyone. Wine. Yes, wine. Let's find out how wine can help you during a recession. Fine wine has historically been an excellent inflation hedge. The S&P 500 is currently down 24% year to date and 18% in the last year. Meanwhile, the LivX Fine Wine 1000 is up 14.1%, and the LivX Fine Wine 1000 is up 22%. This century makes everything relaxing. Investing in wine has become much easier than it was decades ago, thanks to a handful of companies such as Cult Wine Investment and startup Vinovest. You couldn't do this in the 16th century where wine factories were monopolized by some faction of society. For many years, the average wine investor was a man in his 60s, but according to a 2021 study conducted by Arena Global, a fine wine research institute, that average is now closer to 40. It's a more stable investment than stocks, but the constraints of specialized knowledge and logistical factors like proper storage have kept most everyday investors out. With a new platform called Vinovest, you can join wealthy collectors like Bill Koch and LeBron James in profiting from fine wine. They handle everything for you, from storage to transportation, and Vinovest even automatically selects the best wines for your portfolio based on your objectives, then advises you on the best times to sell to get the most value for your wine. Do you want to start a winery this year? Hey, it's probably something you should look into. Here are some actions to consider. Begin a sufficient savings plan. Be ready to wait. Investigate professional storage options. To get started, buy at least 3 bottles. Recognize market risks. If you're interested, you can conduct a more thorough search on wine investments on Google. Number 4 on his list is utilities. Everyone uses utilities as a reference. You can practically not live in the world without utilities. Electric, gas, and water utilities, as well as power producers and distributors, are all part of the utility sector. The sector had a market capitalization of more than $1.58 trillion as of July 2022. Do you think that's a lot? Jeff Bezos clearly knows what he's talking about. Although utilities are for-profit businesses, they are part of the public infrastructure and are highly regulated. Those who include utilities in their portfolios do so as long-term investments and frequently use dividends to generate income. The industry isn't particularly interesting, but it is recession-resistant. People will still need to heat their homes in the winter and turn on the lights at night, regardless of what happens in the economy. High entry barriers protect existing utility companies' profits. The infrastructure required to deliver gas, water, or electricity is quite costly, and the industry is heavily regulated by the government. The sector is also known for paying consistent dividends due to the recurring nature of business. If you're looking for the best utility stocks, the names in the Utility Select Sector SPDR Fund are a good place to start. Lastly, he mentioned healthcare. Healthcare has been the most anticipated item on Bezos' list. Since the COVID-19 outbreak, the health industry has been putting measures in place to ensure financial success. Investing there would not be a bad idea. Because of its lack of correlation with the ups and downs of the economy, healthcare is a classic example of a defensive sector. At the same time, the sector has a lot of long-term growth potential because of favorable demographic tailwinds, especially an aging population, and a lot of innovation. Selecting specific healthcare stocks may be difficult for average investors. However, healthcare ETFs can offer a diversified and profitable way to gain exposure to the sector. Vanguard Healthcare ETF provides investors with broad exposure to the industry. Investors interested in specific segments of healthcare can consider the A-Shares Biotechnology ETF and the A-Shares US Medical Devices ETF. That's all for the video. Let's quickly wrap up what was discussed by Jeff Bezos in this video about the recession. Fine arts, real estate, wine utilities, healthcare. Try your hands on these tips from Jeff Bezos. Hey, take a minute to like, share, and subscribe to this channel. Share with us your comments as well.